Another day of muted trade on the street with the Nifty now below 23,600 mark with the mixed trend in broader indices. The IT sector is extending outperformance with pharma lending support. PSU banks, auto real estate remain under pressure.
Wockhardt surges in trade after its breakthrough. Antibiotic Xenic receives approval for treating complicated urinary tract and kidney infections. The drug addresses a multi-billion-dollar global market and has demonstrated strong clinical efficacy.
Interglobe gained after management highlighted resilient travel demand, improving unit revenues and a near complete restoration of disrupted international capacity. Meanwhile, Asian Paints advanced after reporting strong profit growth, record gross margins and maintaining a positive demand outlook.
The government has reduced windfall taxes on fuel exports as crude oil prices cooled from recent highs, offering relief to refiners and oil marketing companies. Export duties on petrol, diesel and aviation turbine fuel have been lowered effective the 1st of June. Meanwhile, commercial LPG cylinder prices have been raised by 42 rupees per cylinder.
Electra benefited from faster bus deliveries and margin expansion, while Indocount impressed investors with growth despite tariff-related challenges. On the other hand, IDETA slipped as higher provisions and margin compression weighed on profitability.
May auto sales remained healthy across segments driven by strong rural demand, exports and financing availability. M&M reported robust growth in tractors, SUVs and three-wheelers, while Bajaj Auto saw strong gains in both exports as well as commercial vehicles.
Hello and welcome. You're watching Buy Now, Sell Now. I'm Kavita Thaplia. With me is my colleague Ashesha, and next 1 hour is going to be about your stock-specific questions. This is the show where you can send across your stock-specific queries. We'll flash a QR code on your screen. You can scan it and you'll be connected with a WhatsApp number where you can send across your questions. Write down the name of the stock, the price at which you bought it and the timeline till when you want to hold it. We'll be having a technical as well as a fundamental guest on the show who can answer all of your questions. And this is the WhatsApp number and the QR code that you can scan and get connected with our WhatsApp number. All right, so let's look at the markets, and currently what we can see is quite a muted trade today, and definitely it's a very range-bound movement that we can see. Sectoral indices are indicating broader weak market sentiments. Banking, financial services, FMCG, consumer durables, reality are leading the decline. Financials remain the biggest drag so far, reflecting pressure on rate-sensitive and consumption-linked sectors. However, IT is definitely a standout outperformer. Definitely technology stocks are doing good. Media is one sector where we are looking at gains more than 2% on the index. IT services trading firmly higher along with pharma giving a support, marginal upside over there. A lot of stock specific action. We are looking at Asian Paints. The rally continues 4% after the Q4 results. We've seen Nomura and Motilal also have revised the target prices and given a buy rating. Motilal Oswal has retained a neutral stance, although citing demand uncertainties despite raising its earning estimates and growth outlook. So a lot of stock specific action that we can see in the market today. That's Asian Paints flashing on the screen, but we'll also get you Wockhardt. Advances almost 11% as the US FDA has approved Xenic. It's a treatment for adults with complicated urinary tract infections. So it's almost up more than 11%. We'll get more update and stock specific action ahead in the show, but then it's time to look at the FNO 360 segment powered by 5paisa. Our colleague Sajid has joined with more details. Sajid, over to you.
Thank you, Kavita, for that. You know, the market's trading in a range bound as we speak. Gave off all the morning Q gains there, up nearly 0.2% at this point in time with a premium of 60 and open interest addition of nearly 1.6%. So some shorts getting built in this market as we speak there. Nifty Bank again, it was, lower and trading lower because of the shorts that's getting built across the board with open interest up nearly 1.33% there. Look at the constituents of Nifty Bank. You'll see across the board there is private sector or public sector, there is an shorts which are getting built up. Except for Bandhan Bank, where we are seeing a long build up, or a Federal Bank where we are seeing a short covering. It's across the board short build up for the banking pack there. Look at what's happening in call and put writing. You will see that 24,000 been aggressively adding on open interest from the call writers there. 23,600 is also seeing some good interest in terms of call writing from a open interest point of view. And if you look at the distribution chart, it gives you a good sense of where the resistance is going to come in from. At this point in time, 2700 seems to be some kind of resistance which is there, with call and put writers having almost equal open interest positions there. We're going to see some shift happening towards the end of the day when the rollover happens to the June 9th series there. But future gainers, we're seeing IT being the sector of the day. Persistent, Infi, Coforge all up nearly 4% in today's trade. In the losers, you have Ionos Wing on the back of disappointing numbers, down 7%. GVT and D, that's down nearly 4%, and Suzlon is down nearly 4% in today's trade. Open interest gainers include IREDA. We've seen 6.5% jump in open interest for that. Alchem is seeing a 5.7% jump in open interest on the back of short build-up, and BDL continues to see some short build-up, open interest up nearly 5.5%. Losers in open interest today is Hitachi, where we are seeing a long unwinding. HCL Tech is seeing a short covering, and GVT&D is seeing long unwind, which is happening there. Asian Paints 2800 June call, the premium of nearly 1.65 to 44.6, 35,000 contracts added. The stock hovering around the 27-21 mark there. Infi 1200 is also seeing a good aggressive addition in open. 4 lakh contracts added. The premium of 20.5 to 45.45. The stock hovering just about the 1200 mark as we speak. And in the put, you have Interglobe 4000 June put, where the premium is down nearly 28.2 to 17.9. The stock hovering around 4500 level, with for 4000 and 4400 put being the most active at this point in time. So the market is hovering on a narrow band, currently positive, the Nifty, but we're going to see some interesting moves in the next 2 hours.
Sajid, thanks so much for joining us with all those details. But let's shift focus real estate sector. Then we have Arkade Developers and the management of that company, who is now joining us. Chairperson and Managing Director, Mr. Amit Jain, is now joining us to decode what the fourth quarter looked like and what the outlook is for FY27. Mr. Jain, morning. Thank you for joining us. Shesha this side. I was just going through your numbers. All the revenues have seen an uptick. Strong outlook for FY27 is why the street clearly is excited. If you can take us through what transpired in the fourth quarter, what is the launch pipeline looking like for FY27?
In the last quarter of the last financial year, we launched a project in Goregaon, West Bangur Nagar, which added towards the revenue spike, the sales spike, pre-sales spike. And we did close to 200 crore in the last quarter itself, which is a growth of 49% on a year-on-year basis.
All right. Yeah. Mr. Jain, your financials were weak in FY26 as profits saw a sharp decline. Could you explain what led to this sharp degrowth?
No, so there is an entry of an exceptional item. The operational profit, the EBITDA is 189 crore versus 210 crore preceding year, which is marginally down. Because of an exceptional item entry, a note of which is mentioned in the balance sheet, the net profit is less, which will get adjusted in the coming years, which is a deferment. Yeah.
I was just going through the Concoil highlights of the previous quarter, that is the third quarter, and you had told us that there were some environmental clearance delays because of which launches had to be postponed. Did they transpire in the fourth quarter, and how many launches do you have in FY27 now?
In FY27, we are having launches of 2 redevelopment projects and 1 greenfield project in Thane. The Thane project is a huge project which has top line potential of 2,000 crore, which we are looking to launch in this calendar year, in the last quarter of this calendar year. and 2 redevelopment projects, one in Malad and one in Santa Cruz. So total potential of pre-sales of all these 3 projects is around 2,900 crores.
Let's focus or shift lens on the Filmistan acquisition that is expected to
Yeah.
generate a GDV of nearly 3,500 crores. Can you put some
Yeah.
details on those? Have you received all approvals and by when these projects will be completed?
So barring aviation NOC, we have received all major NOCs, aviation NOC and the environmental clearance. And both the clearance, aviation as well environment are in process, and we are expecting the same anytime in a period of say 3 to 6 months, after which we launch the project either in the last quarter of this calendar year or at max the financial year. And it is going to be a marquee project, a very high-end luxury, uber luxury project in ultra prime location of mature markets of Goregaon West. And it is a non-redevelopment projects with high-end apartments, like big size apartments and top of the line amenities.
By when do you expect to receive all these approvals for Filmistan project, and when will it ultimately fructify into pre-sales for you?
Pre-sales we can look at next year, and we are targeting to launch it by this year end or the next first quarter of next year.
Because of LPG issues and elections in some states, there was a labor shortage. How are you seeing this and how is this impacting you, if there is any?
Labor shortage is impacting the construction speed. The season is in the summer season. Normally we see a labor shortage. And this year, because of the LPG shortages, the shortage of manpower has been extra than normal. And it has impacted the construction cost. The labor rates are going higher. The availability of labor is lesser. And even in industries, the availability of industrial gas, the fuel, is reduced down, because of which the production is impacting, say, items like tiles and sanitary ware are impacted. And the rates for the same are also going up, because of which the construction cost is anticipated to go up by minimum 10 to 15% on a year-on-year basis, which
Okay.
will impact the profitability, or either the rates have to absorb the cost escalation.
Understood. So wage hike is possible, and that is likely to weigh heavy on your profitability going forward.
Wage hike is inevitable, yeah.
Right. Also wanted a sense on the demand environment, because we keep talking to a lot of real estate players, and the sense that we are getting is that perhaps we are seeing some bit of slowdown in demand, especially in the premium segment. Since you also cater to that segment, what is your sense and what is your understanding when it comes to demand, especially in the Mumbai market?
So we just came across the registration figures for the month of May, and which says that the figures for registration has gone up by 7% on a year-on-year basis. Though there is a bit of slowdown because of the global issues like war and depreciation of rupee and all such things. There is a bit of slowdown, but it may be temporary, and it is bound to pick up. It will bounce back. That is what I'm hopeful about.
Last question before we let you go. Any other geographies that you are targeting to enter in FY27?
We are exploring the second home markets. We are exploring areas in and around, say, a Karjat or a Nasik geography, where we can also come up with a senior citizen living, a concept-based project. That is what we are currently exploring, other than what we have in hand in MMR region.
You have also secured cluster redevelopment project in Kandivali with a development potential of about 1100 crores.
Yeah.
When will this fructify? What is the timeline of execution?
This is at a nascent stage. It will take some time, and maybe in around a year and a half, we can see visibility of approvals of the project. It is a big cluster. We are expecting adjoining societies as well to add on to our current cluster of 9 projects in Kandivali East.
All right, Mr. Jayan, thank you so much for joining us today and answering all the questions. Thank you.
Thank you for having me.
With that, it's time for a short break, and post that Smartworks co-working on the show to talk on the results.
Welcome back. You're still tuned into ET Now, and as promised, we are in conversation with Smartworks co-working space managing director of the company, Mr. Nitish Sarda. He is now joining us. Mr. Sarda, morning. Ashesha Desai, thank you for joining us today. And you have strengthened your presence in Bengaluru with a 4.92 lakh square feet office lease. If you can take us through what does this mean for the company and how crucial is this lease for you, and what do you aim to do with this?
Thank you so much. Morning to you and all the viewers. I think it is just another edition of a large campus. Smartworks has put itself in a very unique position where we take up these large individual campuses. This is a 500,000 square foot building that we've taken in Bangalore. But our largest asset in Bangalore is almost 40% bigger than this, which is currently at more than 95% occupancy. So we're seeing a significant amount of demand coming up. 500,000 square foot will accommodate more than 10,000 seats in the building. With the kind of demand that we're seeing in Bangalore and in other parts of the country coming up, we're fairly confident, of this asset. We're spending a total of 70 crores on the investment into the asset, the capex that will go up front. And we are already seeing a significant amount of demand coming in from the asset. With this asset, our total asset under management goes up to over 16 million square foot of space, which showcase the Smartworks' unique ability of creating and growing at a pace by taking up such large campuses.
Sure. Hi, morning. This is Kavita also joining in. I just wanted an update on the GCC segment. What's the demand scenario like so far? Anything new that you are witnessing that you can share?
The demand for this year has been fantastic in India. If you look at the first quarter, Indian market office absorption has been more than 20 million square foot. This is highest that India has ever done, and it is backed by the GCC demand that is coming into India. If you look at Smartworks' GCC capability also, we stood at almost 7% of our entire portfolio was GCCs last year. This year, we've already increased it to 15% as of FY26, and we're seeing that grow even further. We think that the demand that is coming in from GCCs is actually taking the new demand or the offset demand from the IT sector and compensating for it and getting more demand for the office spaces. And that's why you'll see that office spaces across the country, vacancies are at an all-time low. And demand is at an all-time high.
Understood. Where are you seeing strongest demand coming from geography-wise? Is it Bangalore, or you're looking to expand into other geographies as well?
We've actually expanded into multiple geographies. We've taken similar size buildings in Bombay, in Pune, in Delhi NCR, and now in Bangalore. I think the sectoral divide with, the finance companies going more towards Bombay and Pune, and then the IT companies coming more towards Bangalore is what we are still seeing getting distributed across the country, but demand seems high in almost every major city in the country. Vacancies in almost every major micro market are at all-time lows. And that is reflected also in the increase in the rental prices across different cities. So we're actually seeing demand coming in from all major micro markets of the country.
All right. Earlier this year, you crossed almost 10 million square feet operational portfolio, becoming the first listed flex workspace platform in India to achieve this milestone. What's the strategy ahead?
I think a 30% growth on that high base is something that we are fairly confident of achieving over the next few years. If you look at our total portfolio, I mentioned we're almost touching 16 million. That means that we've already secured the asset for the next 2 years of growth of Smartworks already. So despite vacancies being at all-time lows, Smartworks has gone ahead and secured the access to the assets to make sure that our growth of about 30% year on year is fairly achievable. And if you look at our numbers also in terms of our revenues as well as our EBITDA margins, we grew by over 31% last year, and you'll see that same trend going over the next year as well. With respect to demand, I think most of the demand is obviously coming from the GCCs, but you're also seeing a lot of homegrown companies, Indian companies choosing flex as a more better, and flexible alternate than going with traditional spaces. So a significant portion of demand for Smartworks particularly actually is coming from people who are choosing to shy away from traditional offices and moving into, a more flexible, more customer-oriented platform like Smartworks.
So this kind of expansion would also need specialized infrastructure, a modernized infrastructure. So what's the plan over there? I mean, you've included a couple of things in the new campus that's been reported. But apart from that, what's the plan on the infra part of your expansion?
So our infra is built around, what modern day employees really require. If you look at our large campus platforms, they're not just providing workstation and desk. They're actually providing an ecosystem for the new age employee. In our large campuses, you have outdoor and indoor gaming zones, you have cafeterias, you have lounges, gyms, creches, and all the amenities, that you can imagine in a five-star campus. But over and above that, we're also integrating with, things like how can we use artificial intelligence to make the space a little better? How can we utilize the dead corners of the spaces? How can we make the entire space tech-enabled? So all of that infrastructure push is already happening. The beauty about Smartworks' product is that because we are managing the entire asset, the entire building, we are able to deploy a lot more things into the building. For example, in terms of an infra push, we're also turning most of our buildings in Bangalore and in Maharashtra into green buildings. About 60 to 65% of the energy from these buildings are funded through renewable energy. So with all of the significant growth that we are seeing, there is a significant push towards renewable energy as well as technologically enabling the spaces as well.
Right. Since you're very bullish in the outlook going forward and the kind of services that you provide, and since you also spoke about the 31% revenue growth that you reported in FY26, how will this translate into FY27 growth, and what are you factoring in at this point in time?
So if you look at the supply, we've already blocked the supply for FY27. We're going ahead and blocking supply for FY28 now. So even if Smartworks doesn't go ahead and sign a new property, with the properties that we already have in the pipeline, a 31% growth again this year is fairly achievable. That is the track or the guidance that we're giving to the market. If you look at our revenue, not just our revenue growth, but even our EBITDA growth, it has demonstrated and grown faster than our revenue growth. Last year we grew almost at about 75%. I think, with the 30% revenue growth, our EBITDA margins will also, grow in a similar proportion. And maintaining a 19 to 20% normalized EBITDA is what we are targeting for FY27.
And revenue growth is what you said, right, for FY27, and this is basis the number of contracts that you've already signed, which means that the guidance is on the conservative side. Assuming that you sign a couple of more contracts in FY27, what will the realistic guidance be in that case and not the base case guidance?
So this is something that we are fairly confident and comfortable with. Obviously, with the kind of demand coming into the market, there is a possibility that we can grow faster than this. But this is something that we have very, very high visibility towards. If you look at our business, it's about annuity income. So almost 85% of the numbers that we are projecting is contracted, signed, already started generating revenue in our books, right? So that is the number that we are fairly confident about. Obviously, we're looking at seeing how can we make it better depending on the further demand that comes in.
All right, Mr. Sarda, thank you so much for joining in and answering all the questions today. Thank you for your time.
Thank you so much.
On that note, it's time for a short break, but post that, Antony will be joining us to talk more on their Q4 results. Stay tuned. Welcome back. You're watching Buy Now, Sell Now, and it's Antony on the show, and we'll be focusing on the Q4 numbers. A big set of numbers, profitability seen under pressure. There's an exceptional gain of 24 crores that the company has reported, and record refused to arrive fuel sales, and obviously there's an impact of prolonged monsoon on the agri demand that we can see. Joining us now is Mr. N.G. Iyer, Chief Financial Officer, Antony Waste Handling. Hi, morning, Mr. Iyer, and welcome to the show. Let's just understand the reason behind this mixed set of numbers. Where did you see the pressure coming in from?
So the numbers are actually positive. The exceptional item that we are referring to was in the year ago period. So last year we received around 24 crores of exceptional gains from an arbitration settlement. So if you take out the exceptional gains of last year on a year-on-year basis, the top line is up by around 19% for the quarter. The bottom line is actually up by around 67%. My profit before exceptional tax items and taxes is up by around 26%. So on the top line, the growth is robust, led by volumes growth. EBITDA is strong at 22% for us for the entire year. Profit after taxes before exceptional items of last year, it stands at around 26% year-on-year growth. So the numbers are pretty healthy on that aspect.
Okay, Mr. Iyer, numbers are pretty healthy for fourth quarter, considering that we strip off the one-off items that you registered in the fourth quarter. Shesha, this side, will this kind of growth sustain the revenue growth that you have reported in FY26 and for the fourth quarter? Is that sustainable in FY27?
Yeah. So yes, the numbers are sustainable and will grow slightly more, mainly driven by the new contracts that we bagged. The two AP projects have yet to start construction phase. The Arkade pre-processing plan is yet to start delivering, and the two large CNT contracts that the company bagged the last year will start delivering from the second quarter of the current financial year. So the top line growth should be around 12 to 15% comfortably for us. Add to that, the margin profile is likely to be remaining healthy in the 21 to 22% for us. So the outlook remains stable and with a slight positive upturn for us.
Right. Any update on the order pipeline that you can talk about?
So currently our order book position is around 18,000 crores. That's a lifetime high for the company. And the order pipeline in that sense of the new contracts that we're talking about, there are three more contracts that the company is bidding for. We are still in the letter of intent stage, so we will be able to get more clarity as and when the letter contract tenders out.
All right. Since you spoke about revenue guidance, also wanted your thoughts on the margin guidance. If you can share with us, you have reported margins in the range of 20 to 21% over the last 3 years. Any levers to expand margins in FY27 that you foresee?
Yeah, so the margins are slightly would be under pressure in the interim period, mainly because of the lube prices, which is a critical input for my profile, is likely to be hit. But bulk of my revenues have an escalation metric, so there will be timing mismatch. So our margins will always remain in the range of around 22%, around plus or minus maybe 100 bips. So our target is to hold on to the margins, work on the improving the margin profile a bit, despite the cost pressures that we are witnessing because of the Iran war.
All right. Any specific impact that you can quantify and tell us about the prolonged monsoon that we can see extending further?
It's a small bit of an impact for us because sale of compost is the only line item which gets impacted because of the prolonged monsoon. I mean, that was down by around 16% for us. But given the fact that the monsoon is likely to start late in the current financial year, we are led to assume and read that the monsoon is likely to be stretched out. So we will be able to offload more quantity of compost in FY27 as compared to FY26.
Understood. So that's as far as the impact of monsoon is concerned. But Mr. Iyer, I wanted your thoughts on two geographies. One in Maharashtra, if there are any fresh order wins either from BMC or other agencies. And second, I believe you were also working on a project in Andhra Pradesh. What is the update on that front and any new projects that are lined up in these two geographies?
So the kind of project that we already bagged in Maharashtra also adds to our footprint in the existing geography. The two new collection and transportation contracts together should add around at least 100 crores annually as revenue for the next 110 years. The Atkoli project is a 10-year project, which is in Thane, that should add at least 68 crores of capital reimbursement in the year first itself. And our ongoing projects are stable growth for us. So that is a very good profile for us as a footprint in Maharashtra goes. The two large Andhra Pradesh projects that we bagged in the cities of Kadapa and Kurnool are waste to energy projects, wherein JFE has taken a 25% stake. It's a Fortune 500 company. And these are 20-year projects, wherein we'll be setting up a 15 megawatt waste to energy projects in these two cities. And on an annualized basis, each of them will start contributing around 80 to 85 crores of revenue from FY29 onwards. So from July onwards, you'll see the construction happening. It's a 24-month construction phase. Post that, it's a 20-year project for us. So these are two large projects that we're getting on with. And there are other projects in the pipeline, as I mentioned, and that should give us a good profile and a canvas to paint our growth strategy on.
Sure, Mr. Iyer. Strategic outlook really looks in place, and also key project wins across collection, transportation, processing, waste to energy, along with the merger of AG Enviro. I just wanted to understand any more benefits, incremental strengthening of your long-term strategy that we can see from this merger that you can talk about.
Yeah, so operationally now we have become a very strong company in the sense, I mean, if you look at the standalone company, the numbers per erstwhile was just around 40 odd crores of top line with a proportionate PAT. Now, if you're looking at the standalone numbers, that's like a 600 plus crore of top line with a respectable bottom line. So that gives me a very good balance sheet to bid for new projects. At a console level, my net debt to equity is 0.3x. So that for an infrastructure company, that gives me a lot of ability to go to the market, raise more debt for future projects. And that gives me a very enviable position in terms of raising funds for the new projects. So this merger really gives me the operational significance, operational maneuverability to leverage the existing profile to bid for more projects in the CNT domain.
Since we are talking about projects, Mr. Iyer also wanted your thoughts on the competitive intensity of municipality projects. Has competition intensified when it comes to pricing across these projects and bids?
So 61% of my cost for any consumption and transportation business is labor and fuel. So that is apples across the system. What brings us to the front is our operational expertise, because for the last 60 years, we have been doing nothing but working with machines and man. And that is our strength. We have around 12,000 employees. We have around 2,800 vehicles, which are specialized in nature. We are able to use them effectively. We are able to get up in the morning, get around 11,000 people excited to get into the garbage collection vehicles and run the routes. So our strength is much more enviable as compared to competitors. And what we bring as a solution to the clients is better. In the sense, if you look at the Swachh Bharat Sarvekshan survey of the clients that we work with, it's always in the top quartile in bulk of the scenario. So most of the cities benefit by working with a company like Antony as compared to our competitors.
All right, Mr. Iyer, thank you so much for taking your time out and answering all
Sure.
the questions. Thank you so much for joining in today.
Thank you.
Thanks.
Thank you.
Okay, with that, it's time to slip into a short break. But post that, we'll be joined by Jigar Patel, our expert on the show. We'll be answering your stock-specific questions. And before we dive into the break, let's just flash our QR code on the screen so that you can scan it, get connected to our WhatsApp number, and there you can send across your questions. Write down the name of the stock, the price at which you bought it, and we'll get you a technical take after this break.
Welcome back. You're still tuned into Buy Now, Sell Now on ET Now, and this is a show where we answer all your stock-specific queries. So keep sending them to us, and we'll try and answer as many as we can over the course of the next 30 minutes. But let's get going then on the technical side. We are now joined by Jigar S. Patel, Senior Manager, Technical Research Analyst at Anand Rathi Shares and Stock Brokers, who's now joining us. Jigar, morning. Thank you for taking your time out. We have Mohit, who has called us from Ludhiana. Mohit, good morning. Tell us, what is your question today?
Yeah, good morning. I got 500 stocks of Bandhan Bank at 187 a piece. I can hold for the next 2 years.
Okay, so 2 years is the time horizon. 187 is his buy price. Bandhan Bank. What will your view be, Jigar, on this counter?
Very good morning, everyone. See, in terms of Bandhan Bank, currently there has been a very good move in Bandhan Bank since last 3-4 weeks. But overall, if we look at a bigger picture, the Bandhan Bank has taken out the major swing high of 190 of 2025 and currently plays above that. So we are expecting at least 240, 250 level as a target. And based on current price action, I would recommend to even add if price action is going somewhere near 205 or even 200, keeping a stop loss of below 180 on daily closing basis. So the target would be 240, 250.
All right, target will be 250. That's the take on Bandhan Bank coming in. But then let's move on. WhatsApp question from Mr. Prasad from Bangalore, and Jigar, Hitachi Power is the stock that he wants to know strategy on. Entry price is 32,000, and can I invest in Hitachi Power More India for long term, and what returns can he expect?
See, in terms of Hitachi Energy, see, currently there has been a very massive move right from 17,000 till 38,000, 39,000 odd levels. But currently, especially for today, there has been a negative pattern forming on daily chart, which is known as bearish engulfing pattern. So I would suggest to trail stop somewhere around 36,000, and target will be open on higher side. But as of now, at least we need a pullback till at least 34,000 or 33,000. As of now, there is no point in buying fresh at this level, and the profit booking will be the advice.
Okay, so Nikhil is now joining us on the phone line from Mumbai. Nikhil, tell us, what kind of questions do you want to get answers to?
Yeah, am I audible?
Yes, you are loud and clear. Please go ahead.
Hi, I'm Nikhil Sharma from Mumbai. I am an intraday trader and a trader in both short and long-term opportunities. I am having 30 shares of HDFC Life at rupees 621.75. My target is 665. So I've taken it for short term. So may I know what is the time to exit the stop, and what would be, will it be better to hold on?
Okay, so HDFC Life, Jigar, what will your view be? He is an intraday trader and wants the short-term target price on this counter.
In HDFC Life, there has been a consolidation seen somewhere between 625 and overall 575 approx level. But if you look at the weekly chart, this is basically a consolidation, and I'm expecting a breakout above 625. So I would advise to hold or even add at this level. See, at least from 1 to 2 months point of view, I'm expecting at least 675, 680 levels as a target.
Okay, let's move on and let's take Mr. Anand's question from Punjab. NSDL, STVN, these are the two stocks that he wants to know a strategy. Entry price is 888 in NSDL, 84 in STVN. I think he wants a short-term outlook, Jigar. What would you recommend?
See, in NSDL, the price action has been continuously negative, but the previous bottom was placed somewhere near 830. 788, but overall the current price action is 812. So we are expecting a divergence at this particular level. So I would, advise to add at this current level, keeping a stop loss of 780 on daily closing basis, and maximum upside is expected till 950, 960. The view will be 2 to 3 months. And SJVN, seen SJVN, the price action has been very, sideways since last 3-4 days. So I would suggest him to, wait and watch. As of now, the breakout will be about 77.8 on daily closing basis. And if the breakout is seen, then definitely a stop loss would be placed below 73.5. And overall, this target would be 80 to 84 mark.
Okay, so 80 to 84, that could be the target on SJVN. Jigar, stay on with us. We have breaking news coming in. India's gross GST collections have risen by 3.2% on a year-on-year basis to come in at 1.94 lakh crore rupees in the month of May. Prakash is now joining us with more details on this. Prakash?
Well, that's an important development coming in as the government has released GST collection data for May 2026, which stands at rupees 1.94 lakh crore in May 2026. Gross CGST in May stands at rupees 37,397 crore, whereas SGST collection registered at rupees 45,143 crore in May, whereas IGST collection stands as rupees 1.11 lakh crore. If you look at net GST revenue for May, there is an increase of 3.3% year-on-year basis to rupees 1.67 lakh crore, whereas the net GST collection was rupees 1.6 lakh crore in May last year. Along with that, the cumulative refunds for the financial year so far climbed 10.9% to rupees 59,000 crore. A very significant development and we can clearly see that there is a significant component of revenue collected through imports. But we are also expecting that the GST collection from domestic consumption and of course from increased domestic activities likely to increase further on the back of reform measures taken by the GST Council. So we are expecting some big numbers going ahead, and it also reflects that the GST collection data is now stabilizing going forward, which is a good signal for the government at this point in time amid geopolitical uncertainties. Back to you.
Absolutely, Prakash. A welcome news. Thank you so much for giving us all those details. Moving on, and let's get connected with our viewers, and let's shift focus to a WhatsApp question. This is coming from Shivanand, and he's from Karnataka. Okay, the stock in concern, I'm really not sure if it's there in the coverage, but he wants to know if there'll be any turnaround in this particular stock. It's Lippy System, and okay, so it's trading at somewhere around 94.18. He bought it at 18.9, and he wants to know a trailing stop loss on this particular counter.
Can you repeat the name of the stock?
Sure, it's Lippy Systems Limited.
See, the stock is basically, if you look at a daily chart, it is circuit to circuit stock. But overall, the weekly chart, if we are looking at, it is extremely overbought, and we are expecting a pullback. So at this level, definitely profit booking would be advised.
Okay, moving on then, we have K. Srinivasulu, who has written to us from Hyderabad. And now he's having some shares of Ashok Leyland, about 30,000 shares of Ashok Leyland, which he bought at 180 rupees per share. He's asking whether he should hold on to these positions, book profits, or buy more. That's his question. Ashok Leyland. Jigar, what will your view be on this counter?
See, in Ashok Leyland, there has been a short-term up move seen last week, but overall, since last 2 days, there has been a pullback. So by looking at the chart, the consolidation is expected and currently ongoing. So the levels would be 150 and 148, which is a previous double bottom levels. So I would suggest him to wait and watch as of now, and 148 to 150 zone would be ideal to add even more at this level, and keeping a stop loss of below 145 on daily closing basis, and overall target would be 170 and 175.
All right, this was on Ashok Leyland. But then, Jigar, since we are looking at auto sales numbers also coming in, we'll flash the numbers on screen as well. So far, what's your take, and any other recommendation apart from Ashok Leyland, this particular counter, that you might want to focus on? We are looking at healthy numbers across segments. M&M reported robust growth in tractors, SUVs and three-wheelers. Bajaj Auto also saw strong gains in both exports and CVs. So any particular pick?
See, in terms of automobile, the best pick would be as of now Bajaj Auto. Structurally, it is very good because inverse head and shoulders shoulder was formed long back, and currently we have also tested the neckline, and currently we are sustaining above that. So as of now, the buying would be, advice would be somewhere between 10,600 till 10,400. Buy on dip is advised. And the stop loss would be placed below 10,000 on daily closing basis, and the first target would be 11,500 and followed by 11,800.
So that's the view on Bajaj Auto. But Jigar, before we wrap on this edition of the show, also wanted your thoughts on the market. We are absolutely flat at this point in time. We've given up all of those morning gains, with Nifty now hovering near that 23,550 mark. Your view on the index, both Nifty and Bank Nifty?
See, again, in Nifty, there has been a consolidation seen right throughout the May month, and currently we are in June start. So we are expecting this consolidation to continue. The overall, the major support would be 23,300, and overall on higher side, 24,100. So we are expecting a sideways move in Nifty. And in terms of Bank Nifty, see, Bank Nifty is currently strong compared to the Nifty because the rally which we saw, I think, last month of around 2,000 to 2,500 points, and later on, since last 3-4 days, we are witnessing some pullback. So on intraday chart, there has been a sign of reversal from levels of somewhere near 54,000. So we are expecting and recommending a buy at this level. keeping a stop loss of below 53,800 on daily closing basis. And overall 55,000 followed by 55,200 would be the target in Bank Nifty.
All right, so that's a take on the market. But with that, it's a wrap. Thank you so much, Rigar, for joining in and answering all the stock-specific questions for our viewers today. Thank you. And it's a wrap on this edition of Buy Now, Sell Now. But short break, and post that we'll get you markets at noon. Stay tuned.